Hi, everybody. Welcome to the first episode of Courtside, our brand new show where we take a deep dive into a stock that we're going to select at random. Joining me today is longtime Fool David Meyer. He has been with the Fool for 20 years, so he's got about 8 years on me. And he specializes in growth and technology stocks, which is a nice contrast to me. I specialize in boring value stocks like real estate and things like that. So we're going to have some fun here. I'm going to learn a lot. We're all going to learn a lot here. So, David, first of all, thank you so much for joining me today.
Oh, thank you for having me, Matt. This is going to be awesome.
All right, so let's go ahead and put the wheel on the screen. As you can see, there are five stocks on it. These are stocks that are very high on David's radar. He knows a lot about them, and honestly, I don't know that much about any of them, so I'm really excited to see. As you can see on your screen, they are Fluence Energy, ticker symbol FLNC, Integral Ad Science, ticker symbol IAS, SportRadar, ticker symbol SRAD, Freshworks, ticker symbol FRSH, and last but not least, the one I am kind of familiar with, Celsius Holdings, CELH. And let's go ahead and spin that wheel. All right, so we are going to be talking about SportRadar today.
All
Um,
right.
all I know is that this is a sports betting company. I like sports. A lot of people bet on sports. Back when I first started following sports, the sports betting industry was a very shady one, to put it mildly. And that is not the case anymore. So, David, before we really dive in, can you give us kind of a 60-second overview of what SportRadar does?
Absolutely. I think the best way to think about Sport Radar is it's the brains behind the bets. So here's what tends to happen. Sport Radar will license data from a sports league. So think the NBA, the NHL, cricket, tennis, literally from sports leagues around the world. They take that data and using their technology and their experience, they transform that data into betting opportunities, which can be bets on the matches, it can be bets on things that happen within games, all sorts of ideas. In turn, it then creates contracts with or sells to betting houses, to media outlets who are trying to advertise these bets. And ultimately, the bets get to businesses like DraftKings, FanDuel, things like that. So again, it brings the data together, turns them into betting opportunities and content opportunities and sells them out. So it is literally the brains behind the bets.
So let me just follow up on that real quick. So when I'm in Las Vegas, if I want to place a bet on sports, it used to just be, you're betting, X team is going to cover the spread or the over under for the game. But now you see a long list of bets for every game, like LeBron James going to score over or under 18 points or, something to that effect. Is that the kind of opportunities that we're talking about here for those who aren't too familiar with sports betting?
Yes, it's that and more. So let's take a tennis match. Who's going to win the next point? What's the probability that there's going to be an ace on the next serve? Is somebody going to create an unforced error? And you can just think there's just a huge amount of options, right? For anything that's happening during literally any global sporting event.
Right. So the biggest question on my mind, as I mentioned on your list of stocks, there's a bunch that I haven't heard of or not too familiar with, and I follow the market pretty closely, so I have to imagine that a lot of people listening aren't that familiar with Sport Radar. How in the world did this land on your radar? Are you a sports fan? Is it a small cap thing, or what is it?
So it's a great question. Yes, I'm a huge sports fan. I'm a sport junkie. I watch way too much sports. But actually, where I heard about it was in an internal discussion. Where there was a group of us who were batting around ideas, and Tom Gardner actually said, "Hey, one idea of a company that I'm interested in is Sport Radar." I had never heard of the company before. And as an analyst, as well as I do that when you haven't heard of something, that's an opportunity to go learn. So I took a look, dove into what the company does, looked at some of its numbers, and I was like, wow, this is actually a pretty amazing business. So, in that discussion, I was sure glad that Tom mentioned it, because I've come to learn quite a bit about it, and I think it is actually a very interesting and very well run company.
So let's expand on that a little bit. What drew you to it as an investment? I know you're a big fan of it. I know you don't own it yet, but you're a big fan of the company. So what are some of the things that drew you to it as a great future investment?
So I got three things. The first one is management. Karsten Curl, who is the founder and CEO, he founded the company in 2001. He still owns about 30% of the shares, about 81% of the voting rights. He's just an amazing founder. And this is one of the trademarks that we tend to look for here at the Motley Fool is we want to, founder-led companies are like right in our sweet spot. But he's really managed the business well. And that gets me down to the second thing, which is they really know how to buy licensed data from sports leagues around the world and not pay too much, not pay too high a price in order to turn that into returns and cash flow for shareholders. So they're just really good at what they do, especially since they've been doing it for well over 20 years. And then the last thing is, I'm not much of a bettor at all. I prefer to participate. I prefer to watch, but sports betting is just a huge and growing market. Last estimate was in 2023, it was about an $82 billion business, growing somewhere in the high single digits. So we have an expanding market, and we have a company within that market that's growing faster than the market as a leader. So you put those three things together, and I became very excited about SportRadar as an investment opportunity.
Yeah, I like that you mentioned the founder's name, who, by the way, I absolutely would have pronounced wrong if you had let me introduce that part. I love that you bring up the founder-led thing because years ago, I say years ago, in 2020, I wrote a report about founder-led businesses, and from an analysis by Reuters, founder-led companies over the 5-year period ending in 2020 returned an average of 30% profit growth annualized over that 5-year period. For for companies with hired CEOs, that percentage was just 7%. So there's data to support that. It's not just something, the fool loves founder-led businesses. There's actually data behind that it puts the odds in your favor. So I wanted to kind of pivot to this. So we've talked about why you like the stock, but with any small caps, especially like all five on your list, they're not risk-free investments by any means. I mean, I know all the small caps in my portfolio are by far the most volatile group of stocks in my portfolio.
Yep.
So what are the things that could go wrong? Is it more of an execution risk thing? Is it more of a regulatory thing? What could go wrong with SportRadar?
Yeah. So first of all, let me just say I totally appreciate the question, and we should never ever forget. Even though we love returns, there's always risk associated with it, and we got to understand what those risks are. So let's get into a few of them. The first risk, I think, is on the regulatory side. So right now, around the world, there are various regulations about how these entities are managed. Right now, they understand the regulations and they are dealing with them. Should those regulations change, right? Let's say it becomes more difficult to operate in a certain country or in a certain state in the United States. That unfortunately would change the business model. Could lead to lower growth, could lead to lower margins. So we always need to be wary of what's happening in the regulatory environment. There's no immediate, I don't see anything immediately on the horizon about something could change, but we need to know about it. The second thing is, again, this business buys data. So there is a cash outlay, an investment in data in order to try to generate a return, sales, profits on the backside of that data. So if the company actually pays too much for the data, spends too much investment capital, there's a chance that it could earn lower than expected returns, which unfortunately over the long term, we know that is a driver of, that would be a negative in terms of a driver for the stock price. And then lastly, this one's a little interesting because paradoxically, if you will, the United States is actually the emerging market of sports betting. It's not available in every state. So one of the growth opportunities ahead of it is as states open up in the United States, it creates new markets for its customers to go into and thus new growth opportunities for SportRadar to supply them with bets. If let's say the pace of openings changes, or some states just say, you know what, we don't even want to do this, it just eliminates a market opportunity. That could also harm future growth rates.
So gave me a great segue there because I wanted to pivot to future growth. You mentioned I love that you say the United States is the emerging market of sports betting. Sports betting wasn't nearly as regulated in most of the world, 10 years ago as it was in the United States. So I don't have the exact figure. You probably know this better than I do, but I think it's more than half of U.S. states that are in some stage of legalizing sports betting at the minimum. So what do you see as the future growth opportunities here? And the reason I'm really curious about this, it seems like SportRadar already has the holy grail of partnerships. It has all the professional sports leagues partnerships. It has partnerships with the big betting companies like DraftKings, you mentioned as one example. So what are the big growth opportunities from here?
So firstly, it actually doesn't have deals with all of the sports industries out there, and this is across the globe. So one, it can sign up new sports leagues. Um, in addition, now we have let's take the pickleball craze, right? We now have a professional pickleball league. Well, at some point, right, that new sports leagues become an investment, become a growth option going forward. Um, the big thing is um, with its current leagues, and let's take the NBA as an example. Um, Not only does in its most recent renewal of the contract with the NBA, it was able to get additional data from the NBA, not just about the NBA itself, but the WNBA, the G League, other pieces of the NBA franchise, where it can then go in and take that data, transform it into betting opportunities. So there is still, from a percent of wallet standpoint, in terms of the data coming from leagues, it's not fully penetrated. So there's incremental opportunities within the leagues that itself. And then you get into sort of the innovation, if you will. What are nascent betting opportunities that are sitting in the data that we just don't know about? And this is where the company's big investments in AI, as well as leadership over its AI initiatives, can help create new opportunities. So I think you have three really solid options for growth, and SportRadar's management is doing a great job of trying to capture those over time.
Just a quick follow up. I don't know how much you know about this. Does SportRadar have any relationship with college sports at this point? Just that's a massive market. I mean, there are more college football games than NFL football games, just for one example.
So that's a great question. In reading its financial statements, I have not seen anything made mention of it. That doesn't mean it doesn't, but I have not seen them directly call that out. It's mainly the professional sports leagues that it discusses in its financial statements.
Okay, so that could also be a potential growth area. I would
Very
think
well
if they had a
could be.
partnership with like the NCAA, they would brag about it a little bit.
I think so, but maybe the NCAA wanted that one on the down low. You never know.
So who else does this? What's the competitive landscape like? Do any other major companies, publicly traded or not, do what SportRadar does?
So a great question. On the publicly traded side, there's one direct competitor called Genius Sports. Um, uh, this company is a little smaller, a little younger than SportRadar, but they actually have access to an asset that SportRadar doesn't have right now, and that's the NFL. So Genius Sports has an exclusive contract to be the sports betting provider of via the NFL data, and but in many of the leagues, there's a sharing of the data. So in order, you could see from the league standpoint, you would want competition to drive up the price of the data that you're selling. So all those two are typically in direct competition with each other. And that's it on the publicly traded side. There are a number of smaller entities. Ones I'll be frank, I've never heard of them, and quite frankly, I don't remember their names. But they are smaller private companies that are really trying to get into this. But from a market share standpoint, SportRadar and Genius Sports are the two big companies in the marketplace.
So this has been a really great overview of a company that I'm pretty sure a lot of listeners haven't heard of yet. So I want to give you any final thoughts on what to expect from SportRadar. What are you looking for in 2025? Like what near term things can investors maybe watch out for, or any other final thoughts you might have?
So I completely agree with what you just said. To pardon the pun, I'm sure this isn't on a lot of a lot of investors' radar, but this is, I will say, going back to what we talked about earlier. Karsten Curl, a wonderful founder and CEO, he has recently reorganized the business in order to get it ready for a more technology-driven um, growth going forward. Lots of investments in AI tools, lots of investments in data analytics. And this was his specialty. He was actually a computer science person before he got into the sports betting industry. So we have a great leadership team. We have a big growing market, which SportRadar continues to take market share from, looking for over the next 3 years, averaging somewhere between 15 to 16% annual revenue growth. And now we're seeing more productivity coming out of the big investments that they've made with the leagues. So we're starting to see on the bottom line, the net margin expand. We're starting to see cash flow grow a little bit faster than revenue. And the market is just, in my opinion, is just starting to recognize this. Plus, in their last earnings call, revenue expectations, profit expectations came in a little bit ahead, and they've been raising those expectations, saying, "Hey, we think we have a good momentum on our side as a business." If you tie all those things together, if that continues in 2025, the stock looks reasonably priced here relative to the growth that's ahead of it. So I think 2025 could be another good year for the company, and hopefully another good year for its stock.
All right. So, David, thank you so much for joining me. It's been a great first episode of Courtside. Looking forward to many more, and we'll have to have you back to talk about another small cap, because I love learning about new companies. There are thousands of them, and it sounds like you have a lot on your radar. So, thank you again.
I really appreciate the opportunity, Matt. This was a lot of fun.
All right. And we will see you next time on Courtside.